Thank you for all of you guys that are here and being in our Core 90. And today we got some great guests, but I want to talk to you guys just a minute about what we got going on here. Is that, it's interesting. We're coming to the end of the year. We got less than 53 days per se, and we are in a new year. And this is a time where it's very interesting that I see agents start disappearing. And they think, we already are a little slower market, but then they think, oh, it's even going to slow down more for Christmas. And I can tell you that some of my best years ever were the years were November and December, because all the other agents quit working. And I was working doubly as hard and getting prepared for the beginning of the year. And the other is people don't show up for trainings. They don't show up for things. So you guys that are here, I want to honor you. I want to honor you for being here and taking the time. And I want to encourage you to power through this year. Take Thanksgiving off. Take Thursday through Sunday off if you need to. Take a few days off for Christmas. Take a week off if you want to. But don't work 20% all the other days. And this is what I see people do. December comes, they're like, well, I'm already on Christmas. So they start spending a quarter of the time working rather than working hard and then taking full days off. So that's what I encourage you to do is think about this is take that holiday off, but the rest of the time, treat it like work and you'll be prepared for the beginning of the year. So as we get started here, guys, we have got a few guests, and Luna Dietz, as you know, is part of our community, is one of our top leaders, kicking butt, really contributing, is here. And she's brought a couple guests today to talk about really loans that have to do for veterans, and they're going to talk to you a little bit about police force and some other things. But Luna, I'm going to let you take over, and I want you guys are going to need to unmute, and I want you to go ahead and introduce your guests. Some of you might recognize their faces. So we've got them on here twice, but they're going to do a great job. They did a great job last week.
Hey, everybody. Thank you so much, John. I always appreciate the warm welcome. I have some amazing guests today that I really want to put the focus on. And they are so knowledgeable and passionate about our military personnel. And what great timing. I actually just put this together. You guys, Saturday is Veterans Day. So use this time and this week to lead up to Veterans Day, celebrate our veterans, celebrate our military personnel, and also help educate them about their VA loan. So what I'm going to do is we have Travis here and we have James here. I'm going to kind of throw the mic over to Travis and he could give you guys a little background and tell why you're so passionate about the veterans.
Yeah, thanks so much. Yeah, so thanks for having us 2 weeks in a row. We really appreciate it. And I've been telling Luna that, last week's conversation that we talked a lot about social media and video and chat GPT. And that's a passion of ours, of course, because we went all in for the last year or so. But our true passion that James and I have is helping veterans. So if you take, Polk County, Marion County, Benton County, and Lynn County, we've been the number one VA lenders for the last couple of years in those counties. So we take a great deal of pride of doing VA loans. I'll let James talk about his service in the military. But I did Homes for Heroes for about 10 years. And it's a big passion of ours to help those that serve our community.
Yeah. So as Travis mentioned, I'm a 20-year veteran myself. So prior to me getting into the business, I was obviously serving active duty military, and I was sending all my veteran friends to Travis to do his loan, to do their loans. So when I was getting ready to retire from the military, sorry about that, and I wasn't sure what I wanted to do when I grew up, Travis said, hey, why don't you just quit sending all your friends to me? Why don't you come get in this business with me and start doing the loans yourself for your friends? So it's been an awesome, transition. And the thing that's been great about it, and you could probably do the same on the real estate side, is whenever I start speaking with a veteran about their home loan, most of our conversation ends up just being about military service and sharing stories and where did you serve and where all have you lived and all that kind of stuff. And then after about 20 or 30 minutes of talking, then we're like, oh yeah, I guess we should probably talk about your home loan. But it's it's really a rapport thing with anybody, right? It's a relationships business. Doesn't matter who you're serving, but certainly when you're working with veterans, veterans with PTSD, all that different kind of stuff, it really is about that relationship and getting to know that service member and the service that they provide to the country, and then talking about lending in real estate. So
yeah. Well, thank you so much, you two, for joining us today. I'm really excited. So as you guys know, really love when the audience engages. So drop your questions or your experiences into the comments. But first, I would love to see who we have who are real estate agents, and either, do you serve on National Guard right now, or are you a veteran? Let's see our veterans pop up, and you guys, let's, remember to reach out to the community and say thank you for your service. So I'm really excited to get started. I have some military experience, but I didn't serve the country, in a different way. I was a military spouse, and I grew up.
Can I speak to that for a
Yeah,
second?
of course.
Okay. You did serve. And so, my wife, is obviously a military spouse, and her contribution and support to me as a service member was what helped me be a successful service member. In fact, when I served overseas, I was in Iraq in 2009. I would say my wife had a harder job than I did, because she had to keep the household normal, the kids, feeling like it's okay, dad's gone, and doing the job by herself. So veteran spouses, they served as well.
They definitely do. And you guys, and we'll touch on that as well too, how spouses or even kids can benefit from the VA loan as well. Okay, you guys. Well, I want to kind of just hand the torch over to, and we could kind of talk about the lending side of things. As realtors, though, this is how we can serve our heroes, is by having the education of what the VA loan is. Get rid of that stigma. Educate our sellers and educate our buyers. So I'll let you guys kind of take over and kind of talk about the VA loan first.
Yeah, thank you. I think the first thing we need to discuss is, if you are taking on a listing, please click the box where you will allow a veteran and a VA loan to buy that house, because there's nothing more demoralizing than a veteran who's been searching for a house, and they're looking on all these platforms and they find the perfect house, and then they scroll down and it says cash or conventional or FHA. They don't have that VA box checked. And again, as real estate agents, you guys will make that phone call and say, hey, I have a VA borrower. Can we make an offer on this house? They're wonderfully qualified. So I think that's a big stigma that people don't understand, is that VA loans are not harder than any other loan type. The loan itself actually is a whole lot easier. I mean, the part of the benefits of it, there's no down payment. It has flexible underwriting and credit. There's no closing cost options available for them. So sometimes we can cover all the closing costs, and there's no monthly mortgage insurance, and there's no loan limit on a full entitlement borrower. So what that means is that if they're qualified, they have good income, good assets, good debt to income ratios. Like we can do a $2 million house for them, a $2.5 million house. I mean, if they're making that type of money, right? So there's no loan limit. And I'll let you talk a little bit more about the appraisal situation too, James. But one of the things I do want to talk about real quick is this is in the VA handbook. So this is something that the underwriters, it's the VA lender handbook. Underwriters see this, and here's what it says. Underwriters are encouraged to consider every possible appropriate basis for approving loan applications for every qualified veteran. What's cool about this, and that was found in the VA pamphlet, form number 26-7. So what's cool about that is you don't see that type of verbiage on a conventional loan or an FHA loan or USDA loan. It almost feels like underwriters, they're not trying to decline a loan, but they look for reasons that this loan could be risky, right? What's the risk to us? Whereas on the VA side, the underwriter is given, she's encouraged, him or her encouraged to find a way to make the loan work. And we've seen that in our business a lot, where we have somebody who's 56% debt to income ratio and a 602 credit score, and we get it done. Like the underwriters find a way to make it work.
Yeah. So what Travis was kind of talking about there is the hurdles that we see the most on the lending side from usually the listing agent, of course, is questions about the bad stigma that was rightfully so created regarding appraisals of a VA home, right? But what's happened is it's been a decade, right, since that that was going on, and but that stigma has still remained. So, we want to talk a little bit about appraisals for VA homes, kind of help hopefully change your mind about the perception of them. And then hopefully we can pull this thread a little bit and you can ask your questions so we can just specifically address them. But really at the end of the day, if you have a house that you want to list, before you make that decision to not check that VA box, reach out to a lender, maybe talk about your concerns. Like what is it in the back of your mind? What is it with the house that's making you think, hey, this might be a tough VA, especially when we see FHA as a loan option, but VA is not, and VA is actually better than the FHA appraisals. So what the appraisers are looking for on a VA loan really just comes down to the minimum property requirements. So it's tied around, for the most part, like structural. Health and safety is like the biggest one. So like if you have a property with a well and a septic, right? Is the well safe? Is the septic functional? Because that's going to be health and safety if those things aren't working.
That's the same as conventional.
Exactly. And that's the point that I was going to get to. It's like that's going to be no different if you have a conventional loan or if you have an FHA loan. If you have a well or a septic that isn't functioning, you're going to have health and safety issues. And then some other things that we see from time to time are like chipping and peeling paint, right? So if I was going to highlight something that would be like a major difference between like a conventional appraisal and a VA or an FHA, it's going to be chipping and peeling paint on a house is going to most likely be asked to be repaired. But what are the things that you guys are seeing, or what are the concerns in the back of your mind about listing a home eligible for VA that you might be concerned about on an appraisal? Anybody want to raise their hand or type a question in the chat to air some of those questions out?
And we'll get to those questions here once you write them down. But we have a quick story about chipping and peeling paint, if we can tell it real quick.
We do.
So that's the only issue the VA has. And again, if you have chipping and peeling paint, they want that fixed. So we had a file. We had one of our friends was buying a house in Staten, and the appraisal came back, great, but it did have chipping and peeling paint that would need to be addressed, and it was on a fence. So
it was attached to the house.
The fence was attached to the house. So the seller was already moved out; they were gone, and so both agents were like, "What do we do? Do we?" And James and I said, "Okay, well, we can make content out of this." So we filmed ourselves going down to Lowe's, getting all the fence equipment, all the stuff we needed to build a fence. Again, just so you guys know, we have no idea what we're doing. So we probably watched a YouTube clip of how to build a fence. But so we went there and got all the supplies we needed, went and built this new fence, and just took down all the paint chips. And it worked, right? So we got that loan completed, and took pictures, sent it to the appraiser, and they fixed it. But again, just wherever you're at in the country, find yourself a really good VA lender who will go to bat for you and do the things that you need to do. It's not often that we're available. We can go to a house and get something fixed. We have to have the listing agent and the seller's permission to do those things, obviously. Yeah. And we did in that case. But just find yourself a great VA lender that you can trust and roll some questions off of, and they're going to help you. But find someone who's really knowledgeable, because there's a lot of people. I'll flip it over to James real quick. There's one common thing that a lot of people don't understand when it comes to VA loans, and that is, James, we'll talk about
before we dive into points and fees, right, and seller paid.
Yep.
Let's talk about the. Where's it?
Hey guys.
Yeah.
I'd like to add on this. Just let me see if I can see if this thing's going to actually work. Well, you guys can stay in the primary. So I think, this question, is being in the business for 30 years now. Yes, I understand VA and FHA loans in terms of challenges, right? And that stigma, right? And I think that dig in is why I talk to agents about understanding the lending business, that understanding the basics. We're not going to understand all of it, but understand the basics. Like one of the things you pointed out is that fence was attached to the house. Okay. Now, why did Travis say that? Well, because if the fence hadn't been attached to the house, it wouldn't have mattered if the paint was peeling. Okay. Now, something as simple as that, he said it, but most people probably wouldn't have picked it up. So when we come back to this idea that, and these are important things from, I think, we're talking about the listing side, why are you doing it? But these are important things to understand when you're representing buyers that are VAs, right? In terms of, okay, what are the real issues now? I don't know if I've never seen the appraisals come in lower with a VA than an FHA or a conventional. I've seen they come in just as well or as good. I mean, that's a variable. But what, the things I've seen, and let's talk back to this, is one is FHA and conventional. If you've got a roof that's not going to last for 2 or 3 years, you got a problem. Where in conventional, that's not a problem. But that's the same on FHA as it is on conventional. We got peeling paint. That's going to be an issue on an FHA. Am I correct?
Correct.
The other is, if you don't have a vapor barrier underneath the house, that's going to be a problem on an FHA and conventional, which is not, or FHA and VA, it's not going to be on conventional. If you don't have enough crawl space, that's going to be a problem with an FHA and a VA, not conventional. So it's really, there's no difference with VA and FHA from an appraisal condition issue. So as you represent buyers, these are the things that you want to understand that could come up. And when you're going to make an offer, even if the person's clicked VA, this is how much value you can add to your clients of saying, okay, this roof's going to be an issue. If we're going to, and most of the time we can tell if a roof's not going to last for 5 years, guys, right? And there's a way to do certs and things like that. I don't know what it is now. Is it a 2-year cert or do they want a 5-year?
Yes,
2-year.
Yeah.
So that becomes very variable, but we can tell. So the idea is we as agents understand these things. We're able to help our buyers. We also look more educated. And then we're looking and saying, well, if this roof's going to be a problem, we know it's a problem. We should maybe call that out before we get the inspection point and just say, this is going to be an issue. Let's put this into the deal. Let's talk about how that's going to look. So these things I think are so critical on the buyer's side, as well as agents representing folks, to understand these things. And when you understand what we're talking about today and get into details, you just look so much more valuable to the client.
Exactly.
Which is all about serving that client and then getting the next referral, right? Because oftentimes if we get into a deal and that deal falls apart because we didn't recognize what was going to happen, that's when we lose clients.
Yep.
Because for some reason, we know this, the more offers you make that you don't get accepted for a client, they start thinking it's your fault.
Yeah, exactly. And John, I would love to touch on that. So I mainly work with buyers. I, prefer buyers. If I see a listing and unless it's a past client or a good friend of mine, I try to pass the listing on. So if you guys are in my area and you love listings, reach out to me. Let me pass you some deals. No, but I work with buyers, and where I became educated with what to point out, that where I could say, hey, that could be a potential issue with an appraiser calling that out. That might be a lender required repair, is because I go to my home inspections and I pick the brain of the home inspector. I review those home inspection reports. I will also throw some hypothetical questions to my lenders, and I could say, hey, could this potentially be an issue, especially with those FHA and those VA loans. I bring it up before we even write an offer. And you can ask for repairs in your offer. You don't have to wait for the inspection period. You could say, hey, this is an obvious issue. Put it in your offer right away. But being educated on what could be called out, you could walk through, and if your buyer is a first-time home buyer or a VA who's just getting out of the military and they're making the transition to the civilian world, walk through that house and it might be too much work. And if it's listed as is, why go under contract on a home where the seller's already making apparent that it's an as-is offer, right? And they may not be open to lender required repairs. So walking into a home, being able to point out things to your buyers, that's going to bring so much value, and you're going to look like a freaking genius to them. Yeah. And they're going to be like, wow, my agent's super smart. And what does that do? That's going to be word of mouth. So something about appraising with VA loans. Everybody's afraid, are they going to appraise below? So something I really want James to touch on is tide water. I don't know if everybody knows what that is, but it's something really important and something that we actually benefit from versus an FHA loan or even a conventional one.
Yeah. Hey, Luna, can I just touch, you guys touched on two things, and I was just going to, one thing for both of them. I actually had looked at a listing and it said conventional only, cash or conventional, didn't even have FHA in it. and my client was very interested in the house. And I was like, I wonder what's wrong with it. So I called the agent, and he was just a newer agent. He didn't know that it could qualify for FHA or VA, and assumed that it couldn't. That was his assumption. So I went and actually looked at the house and called him. I'm like, is there something I'm missing here? Like, I don't understand. Okay, I see like a broken pane, like on a window. I see some chipping paint, all things that can be fixed. Like, there wasn't anything that I saw that was like glaringly, we can't do FHA or VA at this point. And I had a VA borrower. And I ended up pursuing that list, pursuing it with an offer with a VA. Just like you said, Luna, I contacted the lender, I contacted the appraiser, and I went over the few things of the property. Of course, there was a portion of the roof that looked like it needed some assistance. So we had that looked at, and it actually was just a patch on one side. It was $600 opposed to the whole roof was shot. And so the point that I was making here is, just like Travis was saying, is watch what it says in those listings. You can't always discount the ones that say cash conventional in there. You have to look into it yourself. You should be knowledgeable enough to look at that listing and say, what's wrong here, and call on that. And just like Luna was saying, be prepared, educated to understand what you're looking for, and to call all those people. So I actually sold, and that's the only reason why that property sold. No one was looking at it because it said cash and conventional.
Yeah.
So exactly. And I've gotten deals that way as well. I would look and I'm like, this home looks perfectly fine. Why is it saying conventional and cash only? Yeah. And I called and they were like, well, we just didn't list it, is what the agents would say. And I'm like, what do you mean you didn't just list it? And if I'm really concerned, and before I get my clients excited, there's been times I've gone to the house before I even showed my clients to do a walkthrough on my own to make sure there's nothing major. In all reality too, any home could go FHA or VA if the seller is willing to fix those repairs. Yeah. Sometimes I've had clients as buyers make the repairs themselves. But in all reality, any home could go any direction if the sellers or buyers are willing to make those lender required repairs. So keep that in mind too.
One more thing. Good. And the biggest thing too is, I mentioned it before, but FHA has loan limits. Conventional has loan limits. The conventional loan limit right now is, it's 750 right now. It's going to probably go up a little bit, but FHA is 483 for our areas here in Oregon. VA has no loan limit. So you can have a $1.3 million listing that you better be clicking the box for VA, because a veteran can walk into that with zero down. I mean, that's just the biggest thing. Yeah. They have to, if they want to go conventional, they better put a lot of money down, or they're going to have to go jumbo. And FHA won't even touch it, right? So VA needs to be clipped. It makes up about 15% of the market. So if you don't allow a veteran to buy your house, you're eliminating 15% of the market from the very beginning.
Yeah, absolutely. And then just kind of keep pulling the thread about houses that potentially need repairs. I have a client right now that wants to buy a home that's listed as cash conventional only. So me and the client and the referring agent, we looked over the pictures of the house together, and it, really what it looked like is a remodel that just didn't get finished. And the only two things that stuck out in my mind that the VA appraiser was going to go in and say that needs to be fixed is the small section of drywall by the bathtub, and then they didn't put any linoleum or whatever type of flooring back down in the laundry room. Two super cheap, easy things to fix. And so basically what that client is going to do is they're going to structure their offer as a VA offer. And then the buyer's agent is going to go talk to the listing agent and say, hey, here's the offer we want to put forward to you. Would your clients be interested in our offer? And then just fix these two minor things before the appraiser comes out. That way, you're not giving the appraiser the opportunity to start peeling back the onion, right? They come in, they see that drywall's missing, that they see that there's no linoleum in the laundry room, and it's just plywood on the floor. But they come in and those things are done. Now they're not potentially looking with
not having the appraiser require professionals to come out and really inspect.
Exactly. Yeah. Okay, so now we're going to talk a little bit about Tidewater. That was one of the things that was mentioned in the comments, and something that we wanted to talk about anyway. So this is actually a great thing.
What is Tidewater?
Okay, so the Tidewater initiative is basically when the appraiser has a lower value for the home than the offer price. And so they give us the opportunity to present additional comps before they finalize their report. Yeah, so we have up to 48 hours to put additional comps together and submit those to the appraiser, and then the appraiser can take those into consideration. I think the thought out there is that, well, it's going to be really hard to change the appraiser's mind, and we have seen it go both ways. We have definitely had that Tidewater initiative started, and then the appraisal comes in at value. So absolutely.
I just checked online. There's 71% of appraisals get changed.
Okay, so if you didn't hear what Travis was saying, the stat is 71% of appraisers get changed with the additional comps provided when Tidewater is enacted, right? So that shouldn't concern you if Tidewater does happen, because the wonderful thing about it is that on an FHA loan and a conventional loan, you just receive the appraisal and at the value that they've already decided. And then Travis can probably speak a little bit more to like how to request a reconsideration on that, but it's a process. VA gives us the opportunity to do that upfront right away before rendering that report and having to request reconsideration. So you want to talk a little bit about?
Hey guys, on that too, plenty of the appraisers that I know that do VA are like, we're trying to make this work.
Mm-hmm.
Like that's the attitude that I've got from them, is that we're trying to make this work. It's not like they're trying to protect themselves, which a lot of appraisers are doing right now. Appraisers are getting scared right now, and they want to protect themselves. Where I've seen the VA guys are like, we want to figure out how to make this work. The VA appraisers, no different than the underwriters. So I've never experienced, in my opinion, I've actually typically got better appraisals from VA guys over the years. And I do a lot of fixtures, right? So these are they're high priced for the neighborhood. So it'd be easy for them to underprice them. And yet I've found they've been very workable with me on getting that house put together and appreciating the work that's been done. So I'm positive on the value side.
Yeah. So James is completely right. And then thanks for the comment, John. But yeah, it's a lot easier to get a value changed on a VA loan than it is on a conventional or FHA, because I feel that appraisers for conventional and VA, conventional and FHA, once they turn in that appraisal, they're like done. They don't want to, they're on to their next one. They want to move on. Whereas VA, once they issue the Tidewater initiative, you have 48 hours to give them new comps. And so they're still working on that file, and they're trying to find a way to make it work. So to your point, that's their job. So again, don't let the VA appraisal, that's one of the big myths out there, that VA appraisals are harder, and they're not. They're actually even easier to use. Another one to talk about is two things. One of the myths is that the VA buyers are credit challenged, and they are no more credit challenged than an FHA or a conventional buyer. And here's a great stat to back that up. Over the last 5 years, the default rate amongst all loan programs, so you got VA, FHA, USDA, and conventional, the default rate on a conventional loan is 2.47%. On FHA, it's 9.1%. So 1 out of 10 homes they're defaulting on. Doesn't mean they're going into foreclosure, but they're doing a notice of default. They're missing payments. USDA is 5.2%, and by far the lowest is VA at 1.98%. So just 2 out of 100 loans are defaulting by missing a payment occasionally.
Right.
So, I mean, and again, that's 100% financing typically.
Yeah.
So there's no equity there. I mean, initially, right? There's hardly any equity, as opposed to conventional where you have, 5 to 20% equity or more. So that just shows you that the veterans and those that do VA loans are just, there's a lot of family community base there where they want to be part of something, and they just do not miss their payments. Like this is our home. I'm not gonna screw around with that and take an opportunity where I don't make my payment and they come take my house. You can probably speak to that a little more than I can, James, and you can as well. But
definitely, I have a great question for you. So first question is, can active duty utilize their VA loan while they're still active?
Yeah, yes, of course. So Oregon's a little bit different, and I'll speak to that. But active duty, they live off, most of them live off post. So most of them buy homes. In fact, I had a lot of veteran friends who would buy a home every time they went to a new duty station. And then when they left that duty station, they would actually keep that home as a rental, because there's also a lot of rental opportunities around active duty posts. And then they would go to their next duty station and they would buy another home. So yes, you can use your VA loan while you're on active duty. And then in states like Oregon, where we don't have an active duty post here anywhere in Oregon, but we do have active duty reservists and National Guard that are serving the state. And so those veterans, they have no choice but to live off post, because there is no post. So we have all sorts of active duty veterans here in the state of Oregon who are buying homes while they're on active duty.
Perfect. And so that kind of wraps into a question of mine. My biggest question that someone asked me was my debt to income.
Mm-hmm.
And they're scared. Well, maybe, is my debt too high? Is it, or I don't know how long I'm going to be here because I'm just got stationed. I'm going to throw in Fort Bliss in Texas.
Yep.
I don't know if I'm going to move to Washington. Now, can they utilize the VA home loan twice? Can they use it more than once? Can they use two homes that they own with the VA loan? How does that work?
We can speak to that. James just did that in the last year.
Mhm.
So, and we help a lot of borrowers do that throughout the year. But James, speak to that, what you just did just in the last 12 months.
Okay, my situation is a little bit different than that scenario, but the answer to the question is yes, because there's remaining entitlement. And so when you buy your first home with a VA loan, there's no loan limit, right? So I could buy as much as I'm qualified for. But then when I go to buy my second home, if I'm not going to sell that home that I'm in now, then there's a remaining entitlement calculation that's done that will let me know how much entitlement I've used, how much entitlement I have left, and how much of a home I could still buy with zero down. And then if I want to buy a home that is more expensive than the amount of remaining entitlement that I have, then there's a small amount of down payment that I'll have to put down that's calculated just off the portion that isn't covered by my entitlement. So if an active duty service member wants to hang on to their home and they get stationed somewhere else, they can still use their remaining entitlement to buy a house in another state. My situation is I actually leveraged my VA loan to get started in owning rental properties. So I was one of the fortunate ones, probably like a lot of people in here, who refinanced in the dip. Crazy low interest rate. I got a lot of equity in my home. But we wanted to get started in investment properties. So what my wife and I decided to do is turn the home we were living in into a rental. And we bought another home using our the VA remaining entitlement. And like a couple blocks away from where I live now. We just bought just a little bit bigger house. And so I have two homes within a 3-block radius of each other that both have a VA loan on it. So,
and you mentioned refinancing. So I actually had an agent ask me if you can refinance your VA loan. And if you can refinance it, would it go to conventional or would it go to a VA loan again?
Yeah, you can do either. So you can refinance into a conventional loan, refinance into a FHA loan, or whatever you want, right? But VA probably has, and not probably, they have the easiest what's called streamline refinance there is. It's called the VA IRRL, interest rate reduction loan. And so it's super simple. So, and we're going to be doing a ton of these in the next, hopefully 8 to 12 months, because, all these borrowers, all these veterans we've been helping the last year and a half are all in the 6s, 7s, right? And when rates do come down, hopefully soon, we will be doing IRRLs for all of them. And what that entails is we don't need to look at income again. We don't need to look at the bank statements. We don't need an appraisal. We don't need to look at W-2s, taxes, anything. All we do is look at, okay, we pull a credit or a mortgage only report. Have they been current for at least the last 6 months on their mortgage? And really it's the last year, but you can start the refinance at month 6. So look, have they made all their payments on this home? And if the answer is yes, that's it. We're sending the file in. We don't need appraisal, don't need any of those other things I mentioned. And all it does is they will only do the refinance for the veteran if it makes a net benefit to the veteran, right? So VA is always looking out for the veteran to make sure that they're not being taken advantage of by lenders and other people that are doing refinance repeatedly for them, right? So if it makes a benefit to the borrower, it's a really easy refinance. I mean, you can get them done in 10 days. So, and we do a ton of those.
Also, if you're getting multiple properties, if you want to free up your entitlement, you can then refinance your house that you're leaving or have left already into a conventional loan. And now that frees up your entitlement. And now I can go use my, no loan limit again and use my entire entitlement on my next property.
Yeah.
So.
And you guys, staying in front of your veteran clients or your active duty clients is so important. There's many, reasons why. One, many agents, we forget to follow up with our past clients. You guys, that is a humongous opportunity there for you. Go back 2 years and say, hey, you guys, you've been in your home for 2 years. Would you love a free market analysis on your home? And maybe that was their first starter home. Maybe life has changed in 2 years. Stay in front of them, especially the active duty. And the reason why is because they do move a lot. Yeah. And sometimes they become financial hardship. And if you stay in front of them, there's programs, you guys, the yellow ribbon. That's something I was a part of as a military spouse where I volunteered with. They have programs to help our active duty, even our veterans, to help pay their mortgage. So if they do hit a financial hardship, stay in front of them. And that's something we could do as a realtor and just to bring value to our past clients, current clients, and future clients. So keep that in mind. Find out what those resources are for our veterans and for our active duty, because if you're bringing that to the table, you're going to stand out. Something I do have to ask, loan assumptions. A realtor asked me, can a non-veteran assume a VA loan, and who do they contact for that?
Well, I'll tackle part of that at least. So yes, a non-veteran can assume a VA loan. Okay. Here's the caveat to that though. If I were to allow a non-veteran to assume my VA loan, I'm leaving my entitlement with that home. So I no longer have that entitlement to use for myself. And so that would be something I'd be giving up. You're usually only going to see that if that veteran's in a pinch and there's a reason they need out of that house where they'll allow anybody to assume it.
Most cases, it's going to be a family member.
Right. Yeah. If a veteran assumes my loan, they can assume it with their own entitlement. But if I let a civilian assume my loan, then I'm leaving my entitlement on that property. So what was there? I felt like there was a second part of that question. Was there a second part of that question? Oh, who do they contact?
Would they
Yes.
The servicer? Do they contact their own lender?
So it's the servicer. So because they are assuming the loan as it is, what the interest rate, the payment, however many years they're into paying that loan, where it becomes tricky and where we usually see it fall apart, because it sounds like a wonderful thing is the buyer has to have the ability to cash that veteran out on their equity. So because they're not getting a new loan and they're assuming it as is, if the veteran owns $300,000 on a $400,000 house, you have to have the ability to pay them the $100,000 equity that they have in the home. So that's where it becomes tricky. And it basically becomes a process between the buyer, the seller, and the servicer of the loan to get that buyer qualified to assume that loan. So,
yeah, just to add on to that, great points, James. But let me ask you guys a question. If there's a servicer, so a lien holder, and they have a bunch of 2 to 3% mortgage rates on all their loans, do you think they want to hold all those notes if the rates are currently in the 7s? So ask yourself, how long is it going to take for that transaction to take over someone's entitlement, whether it be on a FHA loan or a VA loan? How long is that going to take? Is that servicer really going to want to keep that at 3%? Make it easy for them, or would they rather get that off their books at 3% and spend that same $300,000, $400,000 to go get another 7.5% mortgage, where they're going to make a whole lot more money, right? So what I found, and just so you know, I've been doing loans for 23 years. I've probably tried to help 70 people do assumptions, FHA and VA. We are 0 for 70. Like the servicer doesn't want to do them. They say that they will do them, but they try to prolong things for months and months and months. And that's another question. Does the seller want to wait that long? Does the seller want to wait 70 to 90 days to close a transaction? No, they'd rather just sell it to somebody else who can get their own entitlement or their own loan, right? So that comes into play. A couple of things I want to chat on. The one was in the chat was, VA does allow a manufactured home that's been moved twice to be financed. But here's the problem. I don't know of any lender who's following through on that. We used to allow it. We don't have any more investors that do allow it. And there are a lot of manufactured homes that have been moved twice. We have like 5 in our little, in Almsville Turner area that are for sale. And we get calls all the time. And VA does allow it, but the investor who is servicing the loan has to also allow it. They have an overlay over this. They don't do it because the problem is, if they were to allow that to happen, what happens when that new buyer wants to go sell that house? The only people they can sell it to is a veteran
or cash.
So that limits that pool. So if that person was to default on the loan, now the bank owns this twice moved manufactured home that they cannot get rid of besides cash or to another veteran. So that's why a lot of lenders, it's just too big of a risk for them. So it is something that VA does allow. And there are some broker type of not broker, but banks out there, like community banks that may do it, like a Central Willamette credit union. There are some banks that will do it, but they're very far and few between.
So I have a question.
There's another question about manufactured homes real quick before we move away from that.
Yeah.
So the answer to that is yes, it does have to be on its own land. They will also, a lot of people know this, they'll also loan on single wides on their own land. They have to be a certain square footage and whatnot, but 600 square feet or bigger. But a lot of people think that they has to be a double wide, and that's not the case. But to answer the question about being on its own land, yes, it cannot be in a park. So
now, quick question, just to kind of bounce off that. Do you guys lend on manufactured homes in parks? I know that's hard to find.
Yeah,
so do you guys, for the people local?
Yeah, for non.
Yeah. We have a broker outlet for it, but frankly, I think that Central Willamette Credit Union here in Salem and the Valley has a good program that's even better than what all of us lenders can broker do. And so that's where we send people. It's just to them because they can do manufactured homes in a park. They are a lot tougher to do. They're not going to be a 30-year fix. They're going to be amortized over 15 or 20, right? But it can be done. Yeah.
So I do have another question for you guys that kind of came to my mind. Now it's kind of like floating away. But if you do go, because VA does allow moved twice home, right? So what if you go under contract and what if you come about where you can't find an investor who buys that? What do you guys do in that scenario?
Well, we look for that on the front side, right?
Okay.
So if a buyer's agent were to come to us and say, hey, my VA buyer is interested in this property, we're going to go research that property to find out, right? If that's, so like, well, the one that's coming to mind was the FHA loan, but which one are you talking about?
So take this back here for a second. So we were referred a VA loan the other day, probably about 3 months ago, and it was with a veteran, and it was a manufactured home up in Mill City, and the seller of that manufactured home, it was gorgeous. It was on a nice setting, its own lot. It was a beautiful setting. It's probably a $500,000 piece of property and manufactured home. And those sellers bought that home for cash like 10 years prior. So just paid cash for it from the seller and they were done. But what they didn't know is that was a twice moved manufactured home that they bought. The seller previously did not disclose that to them. So as we're doing our due diligence on the property, I find out that this has been moved twice. And so we had to stop the transaction. Like, listen, there's no outlet for this. The sellers were devastated because that was all their retirement. Like they put everything into that house when they paid cash and moved from California. And now that value went from 500,000 to probably 350,000 just because they didn't do their due diligence when they bought the house. And maybe their agent didn't either, to really look in to see this was a twice move. They just paid cash for it, closed quick, and they were done. So it's our job as lenders and your job as agents to look at the property profile, talk to title, talk to the sellers, make sure that's only been moved one time. So another thing I want to talk about real quick is a lot of the misconceptions about VA loans that they're more expensive for the seller. So this because there's VA non-allowables, right? So there's a couple fees that the veteran cannot pay on their own. So what happens? So either the seller has to pay it, or someone has to pay it, right?
Yeah.
And so what usually happens is that, again, we're in a time right now where about 90% of all of our transactions are getting seller pay closing costs. Now, that wasn't the case a year and a half ago, where it was probably 9%. And it's not going to be the case in 2 years, probably. So right now, those VA non-allowables don't come into play at all because the seller's paying the closing costs anyway. But during all the last, 20 years of my career, 23 years, closing costs weren't always being paid by the seller. So what do? Is we as the lender take care of those VA non-allowables. And hopefully, if you're working with somebody a loan officer who does a lot of VA loans, that their company is handling the VA non-allowables. We're talking about $1,000. It's not like it's a crazy amount of money, right? So we handle that on the lending side. We have it built in that we just give our veterans, we give them that discount, and we give them another probably $2,500 in credit towards closing costs. And so we take care of all of our heroes, firefighters, police officers, medical, teachers, military. So we give them all that same discount. But the VA non-allowables should never come up. You're going to talk about it with your sellers, but talk to your lender, because the lender should take care of that. Like escrow and title, they all have discounts that you can use towards first responders and military as well. They usually offer 15 to 25% discount off title and escrow fees. And so should the lender. Right. And we do. And hopefully there are a lot of other loan officers and companies that do the same thing.
Hey guys, we've got somebody that's raised their hand, and I'd like to see what he has to say. Scotty, what was your question, buddy?
It's actually back on the appraisal question, but I just have a question in your guys' experience. If you do have, let's just say this, in our area, there's been a couple of appraisers over the years that you don't want.
Yes.
Let's put it that way. And I just got one like last month. So not to be on the negative side here, but it turned out bad. And then we had a tidewater on it. I gave him 6 appraisals within about a half an hour, and he did not change it. And it was pretty ridiculous, but it's like, and we went through the process, did not get a review that changed. So we just happened to be on the other end of it. I know that's super rare, right? I have like tons of great experiences always. But my question is, like, if you see, I know we can't manipulate or change our appraisers, but is there something, if you see someone get assigned up front, can you suggest another guy or another girl?
Yeah. Great question. Scott, what area are you in?
Southern Oregon, Medford.
Okay.
We've had 2 of these guys over the years, and this one guy is still kicking. And I thought, anyway.
He's really old. I thought he'd be dead by now.
Yeah. Well,
Scott, I know who you're talking about.
Scott, and it was a funny thing because he came in like 20 grand low on a 330 with a completely remodeled, beautiful house.
Yeah.
And it was easy comps. It was really bad. And we actually ended up having to kill the deal. And now I have the same buyer in another house for the same price. The appraiser came in over asking.
Yeah.
And probably not even as nice of a house.
Yeah. So great question, Scott. So we're just 3 hours north of you, right?
Yeah.
So we get a lot of the same appraisers. One of the guys, and I can say his name because he's been retired, but you guys probably all know Dennis Tellez. So he was probably the most notorious VA appraiser maybe in the country. But we had him for 20 years. So he would probably do 1/5 of all the VA appraisals that I did. And occasionally probably half the time on his appraisal, we would have an issue, right? But now that he's retired here in Salem, we don't have those issues at all. It was just one man who just, I know who you're talking about down in Southern Oregon. We do quite a bit down there as well. So we run into it occasionally, but overwhelmingly, it's just you've had a lot of great experiences, but it's just a great loan program. You're always going to have a bad apple that just tries to show that he or she is in a whole lot more power than you are.
Yeah, no, I was just curious if there was any way when you see that you get assigned to them that you could actually do something about it at that point.
Yeah. So great question. So we don't know who the appraiser is until you guys as agents find out before we do. So if you go, that's why I recommend going to the appraisal, right? If you can. So if you can make it work, make it work. But that way, you know who that appraiser is, and you can let us know, like, hey, this is the guy who's at the this is the appraiser. What do you know about him? And then we can go, okay, here's what we need to do. But there's no recourse. If VA sends that appraiser out, that's who you get.
Yeah, I mean, that's what I've known to be true. I just thought, I've been in it for a long time too, but things change, so I ask questions.
Yeah. Yep.
So
And
I'm sorry,
I'll kind of
aren't you able to say like no? I mean, I hear what you're saying there, and in our area, I remember there was somebody for a while that there was a lot of agents that were super unhappy. They were just 10 to 20,000 underpriced every single time, killing deals, just terrible. And I remember as a listing agent, I would have to, as we're talking about here, we want to work with our VA loans. We have, an opportunity to work with a buyer who's got a VA loan. However, we've got an appraiser out there that is doing a horrible job. And so I remember at that time having a conversation with my client saying, okay, if we accept this offer, I just want you to know here are some potential things that could happen. Because it depends upon the appraiser who shows up. And if it's this appraiser that shows up, are you okay and willing for us to reject it and say no, or send that person back and get it back into the system again, wait for it to be picked up again, which could delay us in 1 to 2 weeks. However, are you willing to do that? Or there's a potential that, we're looking at a low appraisal and then having to negotiate or have a failed sale anyway. Isn't that something that you can still do?
Yeah, I mean, we can send a note to Denver, which is out for our area. That's the VA hub is Denver, and so we can send an email and just maybe you can't request anybody new, but maybe you can put it off for a week and say, hey, we're out of town or whatever you want to say, and then maybe you get a different appraiser the next time because the other guy was too booked, right? So you can try that. I have tried it. I've been successful at it once before when Dennis was still here, and that's who you're referring to with all the appraisal issues you had, Christine. But again, he's been retired. We have some great appraisers here. Jerry Bone and his son do an awesome job. They do probably 50% of all the appraisals for VA here in the Willamette Valley. Do a great job. But yeah, you can do that. It's going to make it kind of tough to do though. You're just at the whim of at the mercy of VA.
Yeah, it sounds like
let's
we have
be
the
clear
same
on this,
situation.
guys, for the agents and some of our newer agents. This is not unique to VA.
No.
In that there are appraisers on the conventional side, and Scotty and I could name some of them that we know are going to be low. And that's where a good agent starts understanding, do I meet with them? I've seen too many times where agents bring comps and they bring the wrong comps.
Mm-hmm.
And they make it worse. I mean, you guys have probably seen that when you say, give me some comps for the Tidewater, and they send worst ones. They don't understand how to compare. And that's one of the challenges of agents really understanding how to do that. Also, if you've got a house that's been updated, one of the things you really want to do is actually put a list together that's really detailed of all the upgrades you've done.
Mhm.
So like when I'm doing a fixture, I actually put a list of every single item that got updated. I mean, down to trim, down to everything. So they have that because that helps them with ammunition. Now, when I'm doing comps and I'm looking to present, because I'll actually present to appraisers, and you got to do that in the right way. We went through years where appraisers were really open to that, and then they went to being not open to it. And again, it's all in our sales skills and our skills of persuasion, guys, that we're not just putting deals together. There's all these pieces. But, I would actually put together and look at the other comps that I knew of value. And I would say, somebody said they had a remodeled kitchen. The appraiser's not going to inside of all those houses, but you might know them. And I'd say, this inside kitchen this wasn't new cabinets. This was just painted cabinets. This was Formica, not granite, right? So, and you might actually, when you're looking at those comps and you're putting them together, you might go to your lender and actually show them what you're thinking so that they can help you verify it until you get the experience with it, right? Or ask one of your other agents that's got more experience with this. I'll help you guys if you have something on that. so that we make sure that we're really presenting the right information in a way that's going to help them make their job easier. And that's what we're doing in everything, is we're trying to make the other person's job easier, not, hey, I think this might help, guys. Here's what I've done. If you have questions on it. So we present it in a way that they're going to be open. Not that we're expecting you to be wrong, but hey, I'm just trying to make your job easier. You haven't been on all these. Here's what I've had. Here's the listing numbers. Here's how it looks. Here's the change. And I'd actually put together for me, and I know Scott's done this, I'd actually put together the list of the houses and the differences between them. Now,
and that's where education really
that's high
comes
level,
into
right?
play.
That's high level, and you can screw up if you haven't done it for a long time. But
That's
there's a lot of
what I've done
guys, and that's on the conventional side as well.
Yeah. And that's
What
where
I've done with the
education
appraisers.
really comes into play, you guys. And there, as on the realtor side of things, there are certifications we could get through. I know NAR is going through a lot right now, but they provide certifications for you. I know Chris Smith, he's on right now. He just got certified to assist with veterans. So there are certifications and education that we can take as realtors. So we are bringing more valuable. And so you are confident when you see a VA offer come through, if you're on the listing side, or if you have a VA buyer that you're helping. The more education you have, the more successful you'll be, and the more your clients are going to walk away less stressed and more satisfied with your service. I do have a question for you guys. It came from an actual veteran himself. He served in the Marines, I believe, 10 years. He's now a sheriff in the Marion County area. And his question was, let me actually go back to it. I had another question ended up being pulled up. Oh, nope, that's a different. Where is he at? Okay. So he said, are the interest rates the same for the first-time VA home buyers? And then what is he required to put down? And also, what does he need to provide to qualify and prove that he's eligible for his VA loan? And then also, can that be the same for the ODVA, which I know that's a topic that we definitely want to touch on.
Yeah. So a couple things, same qualifications. Doesn't matter if you're buying your first house, second house, third house, so first time home buyer VA, same qualifications. You're going to provide the same exact stuff that you would provide for any loan approval. But of course, the addition is the certificate of eligibility, right? We got to reach out to the VA, get that certificate of eligibility for the veteran to make sure that their service qualified them. The last thing
we can pull those and
we pull them for the we pull them for the
The
veteran.
realtor should ask the potential VA buyers if they have that ready. Is that something we can prep them during our buyer's consultation? Say, hey,
Yep.
this is the form that you need. Let's have it ready. So when you get pre-approved, it's
Yes, because you don't want to make the assumption that when they tell you they're a veteran that they are qualified, because there's a lot of things that can happen in your military service that make it so you served, but you don't qualify. And just to name a couple of those things, obviously, if you get out for bad conduct, especially that was short of your 4 to 6 years of required service. If you get medically separated prior to serving 6 years and it's not service connected, like there's a lot of nuances, though I'm not going to go into all those, but there's a lot of things that can happen to a veteran during their service. Yep, exactly. So that's why it's important for us to have that conversation early, and just not making the assumption that they are going to be able to qualify for that VA loan. And then so as far as the ODVA loan, so I know there's a couple of people on here that aren't Oregon, so you might want to. You might already know if there's programs in your state that are similar to this, but this one here is specific to Oregon. So the Oregon Department of Veteran Affairs has a loan for veterans. It doesn't matter where you served as long as you're buying a home in Oregon. And it's serviced and funded by the Oregon Department of Veteran Affairs for a veteran who has the ability to put 5% down. So the awesome thing about the program is that it is it's a conventional loan. And so that's probably the question we get the most about it is thinking that it's going to be underwritten like a VA loan, that it's going to be a VA appraisal. But that's not the case at all. It just happens to be, it has the word veteran in the name of it, right? So it's a conventional loan serviced, funded by the Oregon Department of Veteran Affairs. It's a conventional appraisal that's going to happen on that loan. And the other great part about it is if a veteran's only putting 5% down, you're going to have mortgage insurance just like you do on a conventional loan with less than 20% equity, but it's really cheap. I mean, in comparison, it's like 0.16%, whereas depending on the buyer, it might be, 0.35 or 0.55 or whatever, for a buyer to have mortgage insurance on a conventional loan. So it's a fantastic product.
Talk real quick about, without saying names,
okay,
a borrower we have who didn't qualify.
Okay.
For VA.
Yeah.
I was just going to ask that.
Yeah.
If they don't qualify for whatever's in the VA,
Yeah.
how can they go about to qualify for the ODVA?
Yeah. So I don't want, I'm not going to write this as a blank check. This is just our experience, right? Is that a good caveat?
Yeah.
Okay. Also, and I've seen it twice now where we have had a veteran whose service did not qualify them for the VA loan. They were discharged with general under honorable conditions. That's the key. That they were separated for general under honorable conditions on their DD 214. They had less than 6 years of service, and it's been a variety of reasons, some eyebrow raisers.
Stroke issues.
Yeah, of the reason that they got out, and they do not qualify for the federal VA loan, but they do qualify for the Oregon Department of Veteran Affairs loan. So that's, we're gonna check into all of those scenarios for the borrower when we're checking to see if they're qualified for the VA loan. And we do that for every veteran, by the way, because a lot of them don't know about ODVA. So we'll lay out both programs for the veteran so that they can then make the decision on which loan program is better for them, rather than just pigeonholing them into the federal VA automatically because they're a veteran.
Why is the ODVA loan more beneficial right now if you have 5% down?
Yep. ODVA's interest rate is at least 1% lower than federal VA.
Wow.
Right now.
And Fed VA is lower than conventional
Right.
FHA right now. So
Yeah.
It's really low.
Yep.
Can you use down payment assistance programs with the ODVA?
They don't have a down payment assistance program. If a veteran was going to try to get, something like that, yeah. But no down payment assistance. They
It's underwritten to conventional standards, so it's 5% down.
Yep. You can buy manufactured homes, but then it's 20% down. So that is the caveat that I'll throw out with ODVA, right?
Yeah.
So
I do have another question. This is a question from Takoya Thompson. She's in the Eugene area. She says, is it common for military parents to help their children utilize the VA loan? If so, what does that look like? And that's something that I definitely wanted to touch in as well. You guys, as service members, and it's a very sensitive topic too, but you may have a widow who, service member had passed away due to their service. They can utilize the VA. I'm going to tie this into the ODVA too. Is that something that ODVA can be beneficial? Can you kind of tap into how the children of the veterans or the spouses can benefit from the VA loan?
The children cannot.
yes, surviving spouse. Yep, surviving spouse can use the benefit. So I'm also going to answer some of the questions that popped up that I didn't address real quick. Let's see here. So question was, so this one, DD 214 just shows you served. It doesn't show eligibility for a VA loan. Yep. Fantastic point. And so that's why we'll look over the DD 214 to make it our best determination on if the veteran will be qualified, because we have enough experience with reviewing those to know if they're going to be qualified. But then obviously we're taking that second step, and we're logging into the VA portal, and we're getting that certificate of eligibility. Most of the time, we don't even need the DD 214, especially if they've been in the service for a long time or they're retired. They're already in the system. We can just go after they put in their application. We just go out to the VA portal and we just download it for the veteran. And then if we go to the portal and it's not an automatic COE, then we just ask the veteran for their DD 214 to finish getting it.
It takes about 2 days.
Yeah, it's super easy. One of the questions was, can you explain the funding fee difference between your first VA loan versus the subsequent VA loan, and also how VA disability affects that? So yeah, there are differences in the amount that you pay for your funding fee on all three of those scenarios. If you have a disability rating of anything 10% or higher, then you are exempt from the funding fee. So you don't have to pay anything at all.
It's funny if people make sure they know the funding fee is not a closing cost.
Correct.
It's financed into
Yeah. So just in case you can't hear Travis, it's not a closing cost. The VA funding fee is financed into the loan. The veteran can pay that upfront if they want. I've had some veterans inquire about that, but they almost always finance that into the loan. So especially for veterans putting zero down, that means their loan amount is going to be higher than what they actually bought the home for, and the VA allows that. If you are using your VA loan for the first time and you do not have a disability, then your funding fee is going to be 1.6% of the sales price.
It's similar to an FHA upfront mortgage.
Yep, correct. And then subsequent use is I'm going off the top of my head here, is 3.3%. And then there's a whole bunch of different scenarios for if you do put money down, if you're refinancing, there's a chart to reference that has all the different breakdowns, but I'm just kind of referencing the zero down. First time is going to be 1.6%. Second time is going to be 3.3%. ODVA does not have a funding fee. So if you have 5% to put down and the veteran is going to do the ODVA, there's no funding fee at all, no matter what. So that's another fantastic benefit of the ODVA. Was there one more question about?
So guys, a funding fee basically, if I'm correct, would be, it's really considered, it's almost mortgage insurance, right? I mean, that's really what we're talking about. FHA doesn't, it's built into the rate, right? So they say there's no, but it's built into the rate. With us, it's a funding fee, right? So if somebody does go to refinance down the road, and I'm not sure on the IRRRL, but on the IRRRL, do they have a funding fee again that they have to pay or not?
Yeah, it's a 0.5, so it's not a huge fee, but it's a 0.5 on the VA IRRRL if they're not if they don't have any disability, correct?
Right.
So if they have 10% or more disability, then they don't have that fee. James went to go get his computer plug-ins because we're running low on battery here. So hang on one second.
And while he does that, I do have a question. So my background in the military, like I said, I was a spouse, but I also have a lot of brothers who served the military. I had an uncle who was the first sergeant.
Yeah.
And I'm just so passionate about it. One thing, it's unfortunate. My brother served just shy of his 4 years. He was in a major accident during training,
right?
Is what they categorized it as, which means that he was probably out, serving our country.
Yeah.
He had broke his back and he is now on full disability. That is his main source of income.
Right.
How do you guys help our veterans who are on full disability qualify for a home? Can that disability, even if it's 50%, 60 or 80 or 100, does that disability count as income?
Yeah, absolutely. And the really cool thing about VA is that we can, if they have VA disability, let's say he gets $4,000 a month for even numbers,
Mm-hmm.
we can calculate that at 125% because that's tax-free money, right? So we can add 25% back in. So that $4,000 that he is actually getting, we can use it as $5,000 because we get it classified as 25% more. And so that's the cool thing about VA is that we're able to do that. On FHA and conventional, with their Social Security and things of that nature, you're only able to go 115%. Mm-hmm. So VA allows us to do a little bit more even with that.
So realtors, if you come across one who say, I'm just on my military disability, I don't make a whole lot of money, keep that in mind. Say, hey, let's still connect you because now we have that knowledge saying 125% because it's tax-free money and they still may end up qualifying for something. Another question of mine that comes from another military veteran was asking, my DTI, what is the percent? Is that the same as FHA or conventional for your debt to income ratio?
Well, it is higher. And to really dial in exactly what it is, of course, is unique to every borrower, right? Because all the factors of the strength of the file, the risk factors, credit score, time on job, all those different things reserves. Are going to, cash reserves in the bank, all that stuff is going to be factored into what that actual DTI is going to be for that veteran. But we've had veterans get approved up to 63 back end. And so if you know this, I'm not explaining this in Insult Your Intelligence, but there's two ratios that we have to look at. There's the front end ratio, which is your housing ratio. How much is your projected mortgage payment going to be compared to your income? And then there's the back end ratio, is that projected mortgage, and then all your other bills, all your other credit card payments, car loan payments, all that kind of stuff. And so we've had veterans get approved at 63% on their back end ratio. And usually we're kind of mid 40s, can still get approval for your front end. Yeah. So, but again, it's going to be unique to every borrower where that line really is at.
And just to clarify that, on a conventional loan, you're not going to see anything over 50% right now. The Fannie and Freddie cut everything off at 50%.
57 for FHA.
57 FHA, but routinely FHA is going to want you to be in the lower 50s at most. Yeah. So you have to have a whole lot of compensating factors. So VA is a much more lenient underwriting process because, again, they are trying to find ways to get the veteran into a home.
Yeah, if I can real quick, this wasn't a question, but it's something that came to mind. One of the questions that I get a lot from listing agents when we have a veteran buyer is when they're stacking the offer up against maybe a conventional buyer on the pre-approval letter, they feel like the conventional offer is a stronger offer because the veteran is, or I'm sorry, because the buyer is putting 10% down or 5% down or 20% down. And then they look at the pre-approval letter for the veteran that's putting 0% down. And so they're looking at it most likely from a skin in the game perspective or their ability. Well, this veteran doesn't even have any money. And that's when you want to talk to the lender before you render a decision to see if you can get a little bit more information about that veteran scenario. So for example, I'll just use myself as an example. Every single time I have bought a home, I've used my VA loan. And every single time I bought a home, I put 0 down because I took the equity from the home that I was selling and I was investing it in other areas because I did not have to put money down. So when you see 0 down on a pre-approval letter and an offer, that doesn't have anything to do with the strength of the file. So that's something you're going to want to dig into. If the automatic perception is, well, this is not as strong as of a buyer because they're putting 0 down. Right.
They're just using that cash in other areas, right?
Yeah.
Exactly. And that's something I tell, my sellers. I'm actually under contract right now. I'm on the listing side and distract me there. I'm on the listing side and I received a VA offer. And the first thing I did was I called the lender. And I picked the lender's brain. And this buyer is very, very qualified. She is getting out of the military and relocating to here in Oregon. And she has additional funds. And that's something I always tell sellers. And I call the listing agent if I'm on the buying saying, hey, these are very well qualified. Yeah. Majority of the time, my VA buyers are a lot more qualified than my conventional buyers. Yeah. And so keep that in mind. And that's where open communication comes into play, you guys. Don't be afraid to call the listing agent and give them information about your buyer. And listing agents, don't be afraid to have that open conversation with buyer's agents. Yeah. Just ask questions.
Yeah. And to answer Chris's question, true or false, you cannot have any federal debt if you want to use your VA loan. That's false. You may be referring to like collections, federal collections, maybe you're referring to that. And that's false and true. I have been able to get borrowers who have federal loan debt. They've used their college, what's it called, the GI Bill. And then they've defaulted on that. We've been able to still get them approved for a loan. We just had to write some letters of explanation on that. But yeah, if they do have federal debt, that's just like any other debt. We just have to calculate it into the debt to income ratios to make that work.
Hey guys, we've talked a lot about details about this. One of the questions I'd have, if we could spend a few minutes on, is how could buyer's agents use the VA to market to get more clients? Because that's really, as much of us are saying, oh yeah, I want to understand the VA, it really is like, we want to understand the VA so we can do more deals.
And how can we build up our production? And that's something we wanted to wrap this up with was these two guys are absolutely amazing at social media, you guys. Right now, that is a huge part in our marketing strategies is social media. So can you guys, to wrap us up, can you dive into how can we market to our veterans, especially with Veterans Day coming up this Saturday?
Well, a couple things. I think that a lot more veterans need to be educated on how they can use their VA loan to get started in investment properties. Right. Well, okay. That's a good point. So there is a statistic out that 40% of veterans aren't even aware of their benefit, that they have that benefit. But I would say even more veterans don't know that they can buy investment properties with their VA loan.
What about land?
No, you can't buy just land. You have to buy a home. But you can buy 2 to 4 unit properties using the VA loan as long as you're going to own or occupy. In fact, we just closed a loan for a veteran, 25 years old, who just bought their first duplex, and was able to use the rent from the side that's currently rented out as qualifying income to help them qualify, right? So I would really be marketing to veterans on how they can get started buying investment properties, and start planting seeds in those veterans' brains that currently own homes that are like, well, I'm staying in this house forever because I have a 2.75, 2.5% interest rate. Why would I ever leave this house? Fantastic. Here's a great way for you to get started in investment properties. Let me show you how you can cash flow on that home that you own right now by turning that into a rental home and using your remaining entitlement to buy another home. So I would, that's what I would tackle personally.
Yeah. And I think more importantly, I'll talk about just the hero realm in general, right? And James and I we can attest this, and all of you that do a lot of loans for these type of borrowers can attest to as well, that they are the most loyal and caring borrowers you could have. They refer their brothers and sisters to you like nothing other, like no other type of borrowers. Conventional people, you may get a referral from an aunt, or they may refer their cousin or whatever. But these, like, for example, we are doing 4 transactions right now for correctional officers that all came from the exact same referral source. We're closing 2 this month. We already closed 2 last month. Yeah. So they work in the same place, referred by the same person, and they just kept snowballing, right? Mm-hmm. Because they care about each other. It's a brotherhood, sisterhood. And if you can get in with a group of police officers, firefighters, veterans, doctors, nurses, teachers, whatever, they care and love each other so much that they will refer you, and you don't get shopped. They're not going, well, I'm going to interview this agent to list my house. I'm going to interview this one. They're like, no, like Sally referred Luna to me to list my house. I'm talking to her. It's
a complete different bond, especially with the military. Even on the spouse side, right? As the spouse is rather your wife or a husband, that's a huge bond in itself. Like, we really relied on each other. We really held each other close. Yeah. And even now, I have so many friends across the United States because of the military service. And same thing with the service members. They have friends and what they consider family members across the world. Yeah. And the great thing about EXP, you guys, is we are international brokerage. So we do have those connections. So reach out to them, get certifications, go into NAR, because then as realtors, we could say, hey, I'm certified to work with veterans. I'm certified to work with relocating service members. Advertise that. That's how you're going to market that and stand out from, silly Susan, who, I hope there's no Susan on here, but, who doesn't have that experience. Any agent can work with a veteran. Any agent can work with a police officer, but it's the agents who actually understand the service that they give to our community and going above and beyond and getting educated and knowing what they're going through, whether it's PTSD, because that's a complete different category. They're under a lot of stress. Buying or selling a home is very stressful. So understanding that they may have PTSD, that's why, and you were kind of mentioning this, that's why they want 5 acres. It's not because the same reason I want 5 acres. They want it for protection. They want it for security, to help with their PTSD. And so understanding your veteran or your military service or your police officer, that's going to be key. And that's where psychology kind of comes in. So brush up on that as well. You guys, get educated, go to NAR, go to your local lenders who are providing education on the VA loan. But education, that's your guys' key to success.
Yeah, if I could add one more thing, we have a great PowerPoint that we can do. If any of you guys want to jump on a 30-minute Zoom with us, we'd love to do it. Just contact us through Jeff, or we can put our contact in the chat here so you have it. But if you want to jump on a 30-minute Zoom just to go over 20 different slides on what the VA loan does for you and the borrower and the consumer and then the seller, of course, we can definitely do that and be happy to do it.
I can add to that, guys. One of the things that I'm thinking about is, you talked about a lot of different discounts that people get. One of the things in our businesses, guys, are explaining things that everybody gets, but if you actually but they're not telling other people. Like the idea, like a listing. Hey, it's going to go to 90 different websites out there. well, everybody gets that, but nobody else is talking about it. So you're the one that's thinking it's a value. So the idea is if you went to the title company and talked about what kind of discount do they actually get, you understood the ODA, and then you actually start marketing that. Hey, did you guys know? It's always about what people don't know, and it's enough to spark an interest for them to actually call you. It's presenting things that are out there, but they're just not aware. And, the idea is 25% here, 25% there. All of a sudden, like, hey, let me show you how you can save $2,000 when you work with me on getting a VA loan. Well, they can save $2,000 working with anybody else. You've just identified it and you understand what it is, and now you're claiming it.
Well, one more thing. I can't believe that we got this far without talking about this part of the topic. And we've asked this to probably 300 different people over the last year, but most people think that the max seller paid that the seller can pay for this buyer is 3 to 4% on a veteran, right? And that's actually so far from the truth. We've done as high as 8% on a transaction, 7%, lots of times 6%. So I've actually had a seller pay off a $20,000 Suburban to help the buyer qualify for the loan. So the way it works, and James, you can probably bring up that verbiage maybe, but the way it works is VA does say 4%, but that 4% does not constitute or does not include the closing costs or the points or the rate or the buy downs, any of those things. So here, I'll read this to you real quick. So the seller concessions include but are not limited to the following: payment of the buyer's VA funding fee. So we talked about that earlier. If they want the funding fee paid for, the seller can pay for that. Prepayment of the buyer's property taxes and insurance, gifts such as a television set or microwave oven, payment of extra points to provide permanent interest rate buy downs, provision of escrowed funds to provide temporary interest rate buy downs, and here's the most important thing: payoff of credit balances or judgments on behalf of the buyer.
So that's the only thing that 4% encompasses. And
right.
So for example, in today's market, like 2 points is, so in today's market, two points would be kind of a normal point buy down in today's market. So 2 points being covered by the seller does not calculate into that 4%, where most people will think that 4% of the sale price is the absolute max that a seller can pay. And that's just not the case. Every single buyer, it has to be, calculated specifically for that buyer to find out where we can land. There's so much more that you can do than that 4%.
Yeah. So for example, we had a file about 2 months ago where we had $35,000 seller pay closing costs.
Yeah.
And we used it for rate buy down. We used it to pay off some debt so they can qualify. So many different things. And the one I was talking about with the Suburban, they went to 2 different lenders just about 5 years ago, and they could not qualify for the loan because they had this other debt. Well, we just went back to the seller and said, okay, let's raise the price $18,000. And we asked for $18,000 more back from the seller. We used it to pay off all their credit cards and their Suburban. And now they qualified easily. We were able to get the loan done with no problem. So make sure that you're working with a loan officer who understands that it isn't a 4% cap. It's much more than that. So again, on a VA loan, you can do so many more things that you cannot do on a FHA or USDA or a conventional loan to get the borrower to qualify. So.
Okay, you guys, we just have a couple more minutes left. So any last minute questions or experiences that you've had with the VA loan? I would say, dive into last week's training, utilize, social media and do 30-second reels about the VA loan or about how you service your heroes in your local community. That's going to make you stand out, you guys, and they're going to come to you. So any last minute questions?
You guys, I was out for a bit, but did you guys talk anything about, we see, on the listings, assumable 2.75 VA loan or whatever. Is that, that's wonderful to think about and fantasize about, but how realistic is it for anything like that to ever proceed into an actual assumption?
I'd say it's less than 1%.
So not even worth considering or pursuing or exploring.
Yeah, we talked about that real quick, and we can just dive into it really quick. But let's say, for example, James's example was that house is worth $400,000. The seller owes $300,000. So if that new buyer assumes that loan, which they can do, they need to bring in $100,000 to make that seller whole.
Mm-hmm. Right. What if they just bought it last year and their situation has changed and they have no equity?
Yeah, then again, that seller, if that new buyer is not a veteran, that seller has to be willing to let this buyer that they probably don't know use their entitlement.
Mm-hmm.
And
what
now,
if it is a vet? What if it is a vet?
yeah, then if it's a vet, then that vet can use their own entitlement. But here's the other thing that we talked about: if that rate is 2.75, how frequent do you think that the person who owns that loan, the lender, is going to want that loan to stay on their books for 2.75? They're going to slow play that closing as much as they can. I've seen it happen repeatedly. So they take 90 to 120 days to close a transaction like that. The seller doesn't want to wait that long. They want their house sold in 30 to 60 days, right? So again, they can be done. And you probably missed the part where I've tried helping facilitate 70 of these in probably my 23-year career with FHA and VA, and not one of them have ever been successful.
That's brutal.
Because the sellers just get tired of waiting and they're done.
Yeah, and so it's really not assumable. Let's get real.
It seems like a great marketing strategy to pique interest in the home, and then it almost always gets financed without an assumption, almost always in our experience, right? So if anybody out there has seen the assumption go through, we have not. So
I'll touch base. I know an agent, his name's Kevin. He's in the Salem area. And last I spoke to him, he was working on 2 loan assumptions. He was saying they were taking about 75 days. I'll touch base with him and see if he could jump in the community, maybe post about that for you guys. But okay, but I think that's it, you guys. I want to say thank you so much to all of our service members. You guys get on to your marketing, start advertising what you know about the VA loan to help our veterans and our service members and their spouses, because Veterans Day is on Saturday. So thank you so much for joining, Travis and James. I super
really
appreciate it.
Luna, I appreciate you, Travis, James. Thank you so much. Guys, take this information, start putting some posts out there. Realize it's just adding to your arsenal. I love the thing that Luna talked about is taking some classes on really understanding comps and how appraisals work, so that adds, it just, every time you get these tools, it just adds so much value to you, and it ends up putting one more deal here, one more deal there, because you've got that extra piece of knowledge that saves a deal. So keep learning, guys. We'll see you next week. I believe next week, Jake and I are doing it on business planning for 2024. So rock and roll. Have a great weekend, y'all, and finish this week out strong. Thanks again,
Bye,
guys.
guys.
Bye, guys.